All right, good morning. I am back with another edition of the Live Wednesday show, and just in the nick of time. I was running a little bit late today, but I got the show started right on time. So today is January 29th, 2025, and today is Fed Day again. It's kind of interesting that years ago I started this show on Wednesdays, and so it always turns out that Wednesday is Fed Announcement Day, so that should be exciting. And there's also lots of other exciting stuff going on here right now, as you probably know. Um, let's see. I got a couple of interesting. You know how I like to bring these graphics up here. So let me. Here's today's SPY so far. Pull up the SPY. Boy, look how gappy this thing is. This is an interesting image to bring up today because it shows the average returns. It shows the returns on Fed Day, right? Like what the market did. And Fed Day always is typically pretty volatile, but it's interesting to see it presented in a graph like this. So the average moves 1%, which, quite frankly, I mean, the past few days, man, the market has been extremely volatile, as you know, going into this week. So the first 2 days of this week were crazy, especially Monday. And I know you know the story, but anyway, all eyes are going to be on the Fed today. And basically, the Fed is expected to not do anything, right? They're on hold. So it's going to be all about Powell's language. And of course, this is the first Fed announcement since a new administration took over, and we know that Trump, wants them to lower interest rates, and we know that Trump wants the stock market to go up, and man, there's just all kinds of stuff, crazy stuff going on. But interestingly enough, and I remember there was a couple of Fed meetings where the reaction was just really, there wasn't much to it, right? These two here. But look at this last one. You guys remember this, right? This is the day that, well, you can see it on the chart here. If I move this chart over a little bit, it was that day right there. Wow. Biggest down day. Might have been the biggest down day of last year. It was huge. So anyway, um, we'll have to see what happens today, but the market always tends to be crazy, and it's always sort of fun to listen to Powell. So we'll see what happens. Fed's on pause, and it's going to be all about whether they're on permanent pause, which they probably should be honest with you. And of course, making excuses for inflation again, right? Because because oh, it's been several years since they deemed inflation to be transitory, and their whole 2% inflation goal and all that stuff. And so, it's been, I forget, like 4 years where inflation's been running over their 2% goal. So anyway, and and it looks to potentially have bottomed out. And so, there's so many things in the mix right now that the potential for inflation to pick up is obviously there. So we'll just have to see. And then, of course, there's the price of eggs, right? Anyway, I had one more graph on here. There it is. This is probably the most fascinating thing I've seen all week so far. Is Think about this. Since the end of 2023, it's the end of 2023. So that's, and this is basically, 2024. So through all of 2024, if you bought the S&P, bought SPY every trading day and sold it at the close, you'd be down. Had you bought it at the close and sold it at the next day's open, you'd be up 28.1%. So what this means basically is that all the gains, literally all the gains in 2024 came after hours, which is just a crazy, crazy statistic, right? If you think about it. So, I mean, this is basically, buying intraday, and this is, the after hours move. Just insane, especially given the fact that this return was basically zero. So that just goes to show you the moves, the big moves, or the moves higher, I should say, come in the after hours trading. And so I can't really explain that other than the fact that what I have been mentioning lately is that I do believe because of the strong dollar that everybody in the world is buying US equities. So anyway, these gaps, especially like, well, this is this year, but the gaps higher on a sort of a daily basis or whatever is it kind of makes sense, especially when you go back to certain areas. Anyway, I should probably open up my list here. I know it makes it a little funkier to look at, but so here we are today. I mean, some crazy stuff, right? I mean, just a few days ago, last week, we hit an all-time high, right? So the market was just made a straight beeline all the way back to all-time highs, and then Monday morning you had this huge gap down to the 50-day moving average, and now it's trying to climb back up. So let's see what happens with that. Yeah, I mean, there's a lot to be said about Monday's open, but what I wanted to look at was, let's go to the old S&P here. The SPY shows the gaps better, but I have the S&P marked. What's most fascinating about the price action so far this week, to me anyway, is, well, I mean, there's a lot to it, but the retest of this channel that I've had drawn on here for quite some time was just incredible. I mean, this past Monday's open was literally right at the top of that channel, which is, pretty viable retest. Things were looking a little bit weird and a little bit rough this time last week because it was still right in this channel. It was sort of right up at the top, and it was into all this resistance, and amazingly enough, it was able to push to new all-time highs, and then this past Monday's open kind of really threw a monkey wrench into things. And quite frankly, I'm a little bit surprised at this bounce back, because everything that's going on with well, I suppose today's going to be a pivotal day. I mean, regardless of the news, the news about the Chinese DeepSeek AI calling into question a lot of things, calling into question our whole AI-driven current bull market here, right? And Nvidia in particular. Today's going to be like after the bell. You've got Mag 7 earnings, and so between Powell and the Mag 7 earnings coming out tonight, it's going to sort of set the stage going forward. Whether this thing's gonna I guess the gap is, for all intents and purposes, the gap has been closed for Monday. But hey, it's pretty amazing. This level of support here just barely, it basically held, right? There's a little bit of a sell-off there, but I mean the market's essentially, like as we speak right here, is essentially like right back at the prior highs, right? Right around, well, let's see, this would be 6,100. Well, there's 6,100. So yeah, I mean we're close enough right now. And so, based on what Powell says and based on the earnings that are coming out, that's going to determine whether, whether this thing's like back at the highs or back down around, Monday's lows, I think. So right now it's just kind of stuck in the middle. So the thing to watch is, and I'm not going to draw anything on it, but the highs from Friday and the lows from Monday. And so basically we're just trapped in a big range right now, and it is what it is, trapped in that particular range. So what I wanted to look at was, well, let's look at the Qs real quick because Qs have a little bit different sort of a character. They still have that same channel, but they did not make a new high. And you can see Monday didn't quite rally as much, although it looks like, it looks very similar, obviously. Let's see what Nvidia is doing this morning. I haven't looked at it yet, but the that first day there, it didn't really recover by the end of the day, right? There was that huge gap down, and it closed near the lows, which I thought was kind of surprising, to be honest with you, that it would close down near the lows, because typically you would have thought that they'd have just bought the thing up, on that gap down. But you can see yesterday was incredible as far as the range. The most interesting thing about Nvidia on Monday, and I'm sure you probably heard this statistic, is that it was the largest loss in market cap of any in history. He's like, I think, what was it like? It was $590 billion in market cap got erased. $590 billion, right? That's pretty incredible. Largest market cap loss in history. So, but it is what it is. Interestingly enough, on that day, see what Russell looks like here. On Monday, the internals were better than they had been in a long time, which was even more unusual. But it is what it is, and so that's a positive sign. Because quite frankly, I've talked about this at length on the show, is that the whole idea of just the Magnificent Seven holding up the whole stock market is not a good thing. When seven stocks or whatever it is, make up a third of the whole index or whatever, it's just not a healthy market. It's not a broad market. And so amazingly enough, on Monday, like I think it was like 300 and something of the 500 S&P stocks were actually higher, right around 300. So that's kind of interesting. Let's see. Um, Apple. Apple's earnings are, well, this is a weekly chart. Let me go down to, yeah, so I guess Apple's earnings are coming out. Well, let me go to a daily and see. Yeah. What day is this? 1:30. So that would be tomorrow after the close. I'm pretty sure, and I mean, I saw the thing yesterday, but yeah, a bunch of several of the Magnificent Seven stocks coming out with earnings after the bell today. Tesla, Meta, a couple others, I think. Apple tomorrow, so that's going to be kind of interesting. This daily chart of Apple, I remember looking at this and talking about it last week, and it's kind of a textbook. This is kind of a textbook technical analysis sort of sell down pattern there, and what a beauty. I mean, that reminds me of the old days. We don't see too much of that these days. I mean, it seems like the patterns on, and here's the thing is that in the old days, there'd be hundreds and hundreds of stocks I'd be looking at, but quite frankly, in this type of market environment, the worst place to be these days is in just sort of your average stock, because everything's turned into, at least for the time being, the market needs to broaden out, basically. So, but anyway, I'm getting off track here. This is beautiful technical analysis pattern right down to the 200-day moving average. You can see that gap. And then amazingly enough, on Monday, Apple was actually up, right, during all that turmoil. So that was kind of interesting, and doesn't get much better than that, be honest with you. So nice pullback to 200-day moving average. What else were we looking at? We were looking at last week. Yeah, Microsoft's kind of been all over the map. Look at that. Microsoft, I guess they're coming out with their, okay, Microsoft, yeah, that's what I thought. They're coming out with earnings after the bell today. So That's some pretty crazy price action right there. I mean, that's just a big giant range between Monday and where we are now. So everything's going to be based on earnings. If you look at the bigger picture, though, look at the bigger picture here. That's pretty decent looking pattern there. Obviously, I could draw a downward sloping trend line across these highs, and if the earnings come out good, I would expect this thing to break out and break out the new highs. If the earnings come in, well, this is just begging to draw a trend line on this. I don't know if I can't resist drawing a trend line. Drawing trend lines on this, drawing this little triangle that just stands out here. So obviously everything's going to hinge on the earnings and the guidance. So we'll just have to see what happens with Microsoft. But it's a good looking chart. Should I save it? Why not? Oh, geez. There we go. Let's see. We'll look at AMD. Boy, this had this big pattern drawn on here, and down around here it looked like there was potential for a rally, but obviously, think about these overhead resistance lines, and quite frankly, I pay more attention to overhead resistance and levels on the upside than I do the downside. So, I mean, just because I have this drawn and it broke down doesn't mean it's going to continue to go down, right? So, but whenever I see something like this, it's just too tempting to actually draw the line there. But boy, this is a mess. Let's see, what do I got here? I got another AMD. Yeah, look at that. There's the daily chart. What a mess. The semiconductors in general are not doing all well. There's the SMH. So theoretically, you can go back and look at this and be like, well, geez, it's trading at about the same place it was last March. But a lot of individual semiconductors have done a lot better. So it's kind of it's one of those things where it's a case-by-case basis. It's just a case-by-case basis. So like if you look at Marvell, oh, let's look at that hit there. Look at that gap close. Anyway, I'm not going to go through all of them. Let's take a look at ARK real quick. ARK is, what a beautiful little box. I drew this box on here. I believe it was last week. Could have been the week before, but really nice little box. This is one of the best looking bottoming patterns I've seen in a while, and as much as I am a little bit ambivalent, and as much as I think, I mean, this thing has been a disaster for so long, but you didn't know what this was. Like just looking at it purely objectively, this is one heck of a good looking chart here. So I guess the problem with something like this, well, it's not really a problem, but part of the problem is that the market is up at all-time highs, and as we've been discussing on the show, overvalued based on every historical metric there is. This market's overvalued, and so the only positive thing that I can see, the only way for this to recover will be if for some reason the money flows go from like the Mag 7 into smaller and mid-cap growth stocks again, which is potential. And then, of course, you're counting on Cathie Woods to have picked the right stocks, right? But anyway, this is a pretty good looking chart, to be honest with you. I've seen mention of the Chinese stocks a lot lately here, and there's Alibaba, right? And this was, at one time, this was one of the Wall Street darlings. This is a weekly chart too, by the way. And so this is another pretty interesting bottoming pattern, to be honest with you. So I've been skeptical of this thing for a very long time, and in a way, I'm still kind of skeptical of it because we have it's hard to say what this new administration and And of course, we know, China stocks. China's got a lot of problems, but I will tell you this, it's got a similar bottoming pattern. Yeah, I suppose that trying to decide like where's the best place to put the top of this box. There's the beginning of 2023. There's that this looks like the best spot. We'll ignore these two little pokes out of the box here, but this is a weekly chart, so obviously nothing happens fast on a weekly chart, but this is a pretty interesting little bottoming pattern. And I mean, quite frankly, like this current week that we're in here and this bottoming pattern looks pretty darn good to me. It really does. So see if there's anything else I want to look at in my list here. Google chopping around up at the all-time highs here. I mean, this is, theoretically, if I draw a, well, let me just do that. Might as well mark up some of these charts while I have them up because, oh, there we go. Yeah, close enough. Close enough. Some of these, quite frankly, I'd like to turn into candlestick charts, but I'm not going to fool with that right now. So there we go. If this was a candlestick chart, that would look pretty good. So we got this channel here and bouncing around in it, and this is another one that basically, back in the day when we were doing everything with the stocks and that, we would always say, hey, don't hold a stock over earnings because I mean, unless you've been holding a stock for a long time, don't hold it over earnings because until these stocks come out with their earnings, everything's just sort of up in the air. Here's Palantir or whatever, and it's another one we talked about recently. Put in that nice V bottom with just a textbook pivot low, and so now it's basically cupped up. We'll have to see what it wants to do from here. But yeah, basically everything's gonna hinge on earnings from here on out. So, or at least in the short term, like every single stock is vulnerable to like the earnings reaction, I should say, because we're right at the beginning of earnings season, right? So, I mean, some of them they're still a couple of weeks away and that type of thing, but any given particular stock that I'd be thinking about buying for a swing trade would best probably to be held off on at the time. I expect today, in theory, today is going to be just kind of a nothing little dull day until the Fed announcement. So we'll just have to see. I mean, look at that. You got like a little, compared to recently, you got this little tiny doji forming right here. And it's going to be interesting to see because it's going to be it's all going to happen this afternoon from like, the last couple hours of trading. So there's not a whole lot to go on, to be honest with you. I mean, you can look at this chart and you could make an educated guess about which direction it's going to take. But quite frankly, everything's going to hinge on how hawkish or dovish Powell is, right? And I guess there's always the potential for a surprise, right? Like I'd be really surprised if they make an interest rate move today, and there's almost no chance of that, but there's always the potential. So it'd be kind of fun if if they went ahead and like lowered rates by 25%. That would probably, I don't know what that would do. So the funny thing about it is, when the Fed lowers rates, there's a narrative that says that they're afraid of something, that the economy's not as good as it should be, and so anyway, the funny thing is, they've lowered rates a couple of times, but interest rates have gone up, right? So think about that. I don't know why I have this in here twice, but I guess I have the weekly and the daily here. So let's look at the daily. So yeah, I mean Powell lowered rates in December and then interest rates went up. So everything's kind of, let's see what the VIX looks like here. VIX has settled down a little bit. Yeah, we had that big VIX spike on Monday. So anyway, back to what I was saying there. They like to, well, so far anyway, during the last administration, Powell would always make sure that they telegraphed their intentions well ahead of time and not give the market any surprises. And so a surprise would be any sort of a rate move here. So I doubt that's going to happen, but I suppose it's possible. Um, anyway, so there's not much to say because everything's going to hinge on two things that are happening later on this afternoon. So tomorrow is going to be a whole different, environment. Like tomorrow morning, we're going to know what the earnings looked like on some of these mega cap tech stocks, and we're going to know what Powell said and how he's leaning. And and then usually it takes a whole day. It takes a day or two for things to settle out and get digested. And so it's going to be interesting to see, if we end the next couple of days still inside of this range here, or if if there's enough to break us out of it. I'm just going to draw it because it's just too tempting to draw, right? And especially given the fact that the market's right up here at the all-time highs. That makes sort of a big difference too. So I'm going to save that. And then when we come back here next time, we're going to take a look and see what the reaction was. And if it broke out of this box, which I expect by next time this week, there's a pretty good chance that we're going to be out of this box one way or the other. But that's a big range. That's a very significant range. So we'll just have to see. One last thing I wanted to notice is, way back here, weeks back or sometime back, I discussed that MACD crossing to the upside, and so that was kind of the little signal there that we were going to get a rally, but all the way back to the all-time highs. So real quick before I forget, notice this little sort of divergence that's happening here. This MACD divergent, right? Like this MACD, it made a high over here, and it kind of looks like it's flattening out. And so if it does roll over here, then you got a divergence, right? You've already kind of got a divergence, unless the market breaks out to a new high and these MACD lines come back up here. So that's just something to be aware of. Um, but the cross above and below the zero line is typically the most important thing. So with that, thanks for tuning in. I will see you back here, same time, same place next week.